Is the dollar collapsing in 2024? According to the Elliott wave, I'm going to try to give you an answer, a very clear answer about it. The following video is not a trading recommendation. We have to give you a clear warning. If you trade, you're going to lose money. And if you don't know technical analysis, you're going to lose a lot of money. So this is not a trade recommendation. This is done for educational purposes only. According to the wave principle, the easiest, best way to identify the trend is by identifying 5 waves in a particular direction, followed by 3 waves in the opposite direction. Typically, we will see the image like 1, 2, 3, 4, and 5, followed by an A, B, C. Okay, this typical structure is the basic structure of Elliott waves, and we can find it in price. As you can see in the dollar index, this is the 2-day chart of the dollar index, where we have a 1 in parentheses, 2 in parentheses, 3 in parentheses, 4 in parentheses, and 5 in parentheses. That means that we have 5 waves down, and they are followed by a 3-wave up that we label A, B, and C, as you can see here. A, B, C. The correction, the ABC, took the shape of a flat. What is a flat? It's a corrective structure that looks like an N. Okay, in this particular case is an expanded flat. So typically this would be the shape of an expanded flat that we'll be looking for in the price action, and that's exactly what we got here. A, B, C. The 5 waves in outside parentheses correspond to the 5 wave of the 3rd wave extended here, of the 3rd wave in parentheses. So we should find 5 waves there, and we can see them 1, 2, 3, 4, 5. In other words, 5 wave of a lower degree, the 5 wave of the 3rd wave. Now, identifying 5 waves to the downside, followed by a correction to the upside, tells us that the trend is down. So at that particular stage, we drew a trend line here, and we were waiting for that trend line to be broken to go short. Okay, and that's precisely what happened. This is exactly what you can see here. Now, after this decline, or after the break of the trend line, we saw that decline, which we can also identify as a 5-wave move. So I'm going to show you a smaller time frame where you can also see those 5 waves decline, and you can see a very similar situation to the previous one, where we had the last trend line broken and then a 5-wave decline. And that's exactly what we're expecting now. We have another 5 waves down. See, 1, 2, 3, 4, and 5. And then we have an A, B, and a C up. And this wave may or may not be complete. Typically, this wave, this correction here, this is a second wave, tend to retrace 50 to 62% of the distance traveled by the previous wave. And in this case, we can measure that, and you can see that if we measure a Fibonacci correction from here, retracement, we can see the prices are exactly at a 62% retracement. That means that we are at a place where the ABC may be about to finish. So now we have the exact same situation we had before, where we had this trend line. Now we put here 2 trend lines that we want to see broken before we can see that the trend has resumed. In this particular case, the downtrend identified by these 5 waves up and the larger trend, the larger 5 waves up that we identified before in the 2-day chart. So now, what are we expecting in 2024? We would be expecting prices to start falling from current level, or not too much above, and continue falling below here to a distance similar to this one, typically 1.618 of the distance traveled by this one. And so we should see the dollar truly experiencing a heavy collapse. I'm going to show you the basic trade setup using a simple indicator like the stochastic. You can see the stochastic here. And basically, let's say that we go to the 2-day chart again, and you can see how in this time frame, when we saw the wave C here ending, we waited for this stochastic to penetrate the reference line, the 80 reference line, and that was enough as to give us the indication the prices were to come down. Of course, the stochastic works when you are certain that the trend is in a particular direction. So if the trend is down, you want to take the selling signals of the stochastic. And now we are in a very similar situation where the stochastic is again overbought. So looking for the stochastic to penetrate the 80 reference line would be a very good signal that we should sell the market. That probably will come accompanied by the break of those two trend lines that I showed before. And it is absolutely possible to use any type of trade setup that you are familiar with. For instance, one that I taught in this channel before, where we have the lagging line with the span line here, and we can wait until this lagging line penetrates the red line, and we will have a sell signal. Again, a sell signal that can be very reliable and that we can trust and trade with certain degree of confidence, of certainty, and probably with certain degree of calmness as well, because we are pretty sure what the market is going to do based on counting 5 waves in that particular direction, in this case to the downside, followed by an ABC to the upside. I hope this video helps you understand even more the trading applications of the Elliott wave principle and what to do with it, and I hope that you can benefit immensely from this analysis.